While they didn't get their entire wish list this year, small businesses are a winner in the budget, with the government describing them as the engine room of the economy. The three key tax takeaways are an increase in the instant asset write-off threshold to $30,000, an increase in the availability of the regime to businesses with annual turnover of less than $50 million. This brings in 22,000 more businesses, and there's a fast tracking of the corporate tax cut to 25% by 2022. This is 5 years earlier than previously proposed and benefits up to 1 million companies. So what do we have? We've got an increase in tax cuts, we've got less onerous depreciation reporting requirements, and we've got an immediate tax deduction. This will put cash in the hands of SMEs, it will help with their expansion plans. Whilst the 2018 budget initiative still has some measures that haven't passed, and this makes people nervous, I fully expect these measures to have bipartisan support. So, where are we at with Division 7A? Well, we're in a state of limbo. The proposed reforms have been pushed back yet again to 1 July 2020. How did we get here? Well, Division 7A is a bit of a complicated beast. It's designed, and it has good intentions, but it's designed to prevent private companies from being able to distribute out profits in a tax-free form, whether it be by way of payment or loan to shareholders or their associates. And the problem can be for small businesses, particularly ones with groups that have trusts and private companies, it's very easy to fall foul of the rules. And whilst conceptually simple, it's very difficult to apply in practice for advisors. And so as a result, there's been a strong push for reform. The Board of Tax in late 2014 made their recommendations. As a result, the then government in 2017 announced the reforms in their budget. Unfortunately, we're still here at today's date with nothing tangible being provided. And Treasury late last year also provided their recommendations. In relation to those proposals, some of them incorporated the Board of Tax's suggestions, but they also made their own specific changes that were highly controversial, led to submissions from stakeholders, and as a result, the delay between now and 1 July 2020 is critical to try and iron out some of those problems. In particular, let's hope that sanity will prevail in relation to some of the more controversial aspects of Treasury's proposal, particularly around the decision to do away with the distributable surplus concept and also the decision not to grandfather 25-year loans. We all know that tax disputes are difficult at the best of times. They're time-consuming, they're costly, and they're a distraction. Small businesses simply do not have the resources to handle disputes with the ATO, and this puts them at a significant disadvantage because, as we all know, in our tax regime, the onus of proof sits with the taxpayer. So it's positive to see the government introduce 4 new measures to assist small businesses in disputes with the ATO. This includes the introduction of a small business concierge, and what that will do is allow small businesses to contact a lawyer for up to 1 hour at a cost of no more than $100, and that lawyer will advise on prospects of the case and assist with AAT proceedings. There will also be the introduction of a small business line within the AAT, and what that will do is reduce application fees. It will provide a dedicated individual case manager and hopefully an expedited outcome. We also have a review into the compensation scheme for members of the public in relation to decisions made by government agencies that were in error, and we have a review into the ATO debt collection practices, with these last 2 measures coming on the back of the ABC Four Corners program last year and the recommendations made by the former Inspector General of Taxation, Ali Naruzzi. How does this compare with Labor's proposals, and under what government would small businesses fare better? It's difficult to say at this stage. Bill Shorten has the opportunity to provide his budget reply speech tonight, so there may yet be another twist in the plot. What we do know is that Labor has come out in support of the government's fast tracking of the corporate tax cuts, and they've also announced the introduction of an Australian investment guarantee. And this is an accelerated depreciation regime designed to provide all businesses with an upfront 20% deduction on eligible assets valued at over $20,000. The downside, if Labor do get in, is the proposal to tax trust distributions at a minimum rate of 30%. And depending on how small businesses are structured, this may very well impact them significantly. So they haven't moved the yardstick too far away. Overall, government and Labor, they're fairly aligned when it comes to small business. So I'd say for small businesses, positive news.